Thank you for joining us today. We're super excited to have Shelly chatting with us about expanding your donor services, how we can partner with you here at the Community Foundation, both to help you and your organizations, but also your donors. So Shelly's going to walk through quite a bit today, and she is just a wonderful speaker. I'm sure many of you have heard her before. But not only is she our president and CEO, she has a new chartered agent in philanthropy designation. It's been working hard on that. So that is exciting and new and fresh. Lots of good info and knowledge for us to share there. And has her MPA as well, and lots of experience in the sector. So we're excited to hear from you. Shelly, I will turn it over to you.
Thanks, Ellie. No pressure there. Nice. Thanks for that intro. It's also nice to have a small group because I know many of you. And first off, thanks for all the good work that you're doing within your organizations. I know year-end giving and all of the things are top of mind for everyone. So I really appreciate you taking the time out to have a conversation with us. Um, and most importantly, I want your takeaway to know that our role at the Community Foundation is to be a champion and promoter of philanthropy across every one of your organizations. So if any of you ever have a gifting scenario, whether that gift is going to potentially come through the Community Foundation or go directly to you and your organization, and you need some guidance and have some questions, feel free to always reach out. We're always, that's part of our mission is to promote charitable giving, no matter where it ends up in Johnson County. And I'll also say I'm, not an attorney. I'm not giving legal advice. We ask our professional advisors to come alongside us and do that. But I know just enough to sort of steer us in the right way and help the philanthropic conversations move forward. We have planned this topic for quite some time. Ellie, you've had the nonprofit series planned for some time, and there have been some changes kind of along the way that have come. So my agenda for today was to we'll level set standard deduction and adjusted gross income. That's like the first kind of conversation that we think about when we talk about changes in the upcoming charitable giving landscape. Having that foundation, I think, will be important for us to know. We're also going to take a little deep dive into the One Beautiful Bill and the impacts of charitable giving in this year and things to look forward to in next year. That's kind of a new addition that we really weren't planning on covering, when we first put this program together, but good conversation to have with all of us. And then jump into some non-cash gifts and some more complicated gifting scenarios that I just want to skim the surface so that you're aware that they exist, and you can kind of be prepared for any additional conversations or some learnings that you might want to do. There'll be time for questions, and we'll just kind of open it up to that. So I'm going to jump right in, hopefully. Can everyone see the next slide?
Yeah.
So you see the first slide. No.
Mm-mm.
That's so strange. Let me stop share. And sorry, guys, you'd think that after all this time, we'd have it all figured out here.
We host monthly community meetings over Zoom and it happens. You're totally fine.
Okay, I've got that. And so you're probably seeing my slides, but not in presenter form, correct? If I move forward, are you seeing the slide?
Yeah, we're still seeing the full, but that's okay. Do you want to just get rid of the little always use subtitles box? And then they should be big enough we can see them.
Better?
Yeah. Everybody read those okay? Perfect.
So I lost. Let's see, can I move you? This is really complicated. I'm really sorry, guys.
Don't be at all.
So I have lost my ability to see all of you, and I'm not able to, it's like really weird. It's like I'm not able to move us around at all. Weird. Okay, I'm just gonna keep going. So Ellie, if you see someone who has a question or needs something, can you verbally say so? And I can't
Yeah.
see everyone, so you're just gonna have to kind of shout out at me if that's okay. Perfect. Perfect. So to begin the discussion, we really need to have an understanding of standard deduction and adjusted gross income. These are two sort of calculations that are really important in charitable giving and kind of determining when a donor is going to give charitably and sort of what that impacts would be. The first is considering standard deduction. So a standard deduction is a set amount, which you can kind of see here on the left side in this graph here. It's a standard amount that the government, basically the IRS, gives individuals or individuals who are heads of household and married filing jointly, basically a deduction amount that helps determine their adjusted gross income. And oftentimes, the standard deduction now is quite large. So you can see for a married couple who files jointly, $31,500 is the standard deduction. The other option for taxpayers to determine their deduction amount would be utilizing the itemization method, which I think we've kind of all been familiar with before. Utilizing an itemization method, so a donor, they calculate their salary and any other income. So salary from their job, any investment income, if they have a side hustle or any other forms of income coming in. It also can be retirement distributions coming into them as income. And then they deduct either the standard deduction or an itemization amount. And it's basically a calculation. So if their combination of mortgage interest and state and local tax and charitable giving and IRA contributions and health savings account spending gets them over the standard deduction, a donor might itemize. But a few years ago, during the Tax Cut and Jobs Act change, a lot more donors took the standard deduction. And we did see that impact charitable giving because, well, we know donors don't just give because of the tax deduction. When they were being told, maybe by professional advisors, that you don't need to worry about keeping those gift receipts any longer because we're just taking the standard deduction, that had a complicating message to donors like, well, is my gift making a difference? Particularly timing of gifts, at year end, there was this sense of urgency happening with year end giving. So we know that those pieces played into account with giving. So we're talking about standard deduction and we're talking about adjusted gross income. And as I move forward with some other pieces of information for you, those are kind of some baseline items that I wanted everyone to be aware of. So Big Beautiful Bill that passed on July 4th has some provisions that are going to impact charitable giving. In particular, there is a specific provision that's going to be impactful for donors who are large donors, making large gifts, also in a high tax bracket. So through the end of 2025, Hi, Kate. Thanks for joining. I get the pop-ups on my screen. So for donors in the highest tax bracket, they are able to take a charitable deduction of the equivalent of their tax bracket, so 37%. But in 2026, so starting January 1st forward, the maximum tax bracket, and tax brackets are 10%, 12%, 22%, 24%, 32, 37, 35, and 37. I may or may not have had that exactly right. But the maximum tax benefit bracket is capped at 35%. So you can kind of see this calculation that I have on my screen. So that means if a gift is of $10,000 is made this year, the deduction can be $3,700 versus if it's made next year, it will be $3,500. Now, on this calculation, it's just $200, but you can see the cumulative effect if we're talking about a donor who's making a multi-million-dollar gift to charity. Another thing that's happening is a new floor for itemized donors. So the first 0.5% of a gift, gifts that are made to charity are actually exempt from the charitable gift calculation. So what does this mean? Well, if a donor has an adjusted gross income of $400,000, the first two, so the calculation is 0.5% of their adjusted gross income. The first $2,000 of their charitable giving won't be eligible for deduction. And that's a significant amount. So for donors who are making just smaller gifts, it might not be worthwhile them itemizing, or we're not sure what the impacts of charitable giving on those changes might be. So that's coming. So we know that there is a sense of urgency for some larger donors and those who itemize to make their gifts in 2025. Another thing to keep in mind is bunching gifts right now can be a smart way for donors to give. So you might have donors come to you saying, I'm thinking about bunching gifts together. What that means is bringing multiple years worth of giving together, either putting it into a donor advised fund, which we have donor advised funds here at the Community Foundation, or telling an organization, I'm going to be giving you, say, $15,000, for example, but I want you to keep track of this because it's for gifts over the next 3 years. So if a donor gave $5,000 per year, they might be front loading into this tax year just because of those changes that are coming to the tax cut, the one beautiful bill changes. So that could definitely be coming. Also, there's a great opportunity for donors who are older, and I'll have a slide on this specifically a little bit later, but donors who are 73 and above who have a required minimum distribution, if they don't need the income from their retirement assets to essentially, live on and pay expenses, it's a great giving tool for them to use. And I have a slide and we can talk about that in just a moment. But another really great thing, in my opinion, and sometimes things have unintended consequences, and we'll discuss that in just a moment, but a universal charitable deduction for non-itemizers was passed. So again, this thought that if we have a lot of people who are taking the standard deduction, they're not keeping their charitable gift receipts, are they seeing any impacts in giving? Is there really an incentive to give charitably? Well, as part of the One Beautiful bill, starting January 1st, 2026, so not this year, but next year, donors who don't itemize, can get a deduction, a universal standard deduction of $1,000 for individuals and $2,000 for couples. So this means it's an additional tax incentive to give charitably, even if you're a non-itemizer. So you're not accumulating those charitable gift receipts to try to get over a specific threshold. The caveat is that those gifts must be cash gifts. They must come directly to the charity, and they can't go into donor advised funds. So there's a couple rules on that. So some things to consider as we review the One Beautiful bill with nonprofits. So donors that are taking the standard deduction, we may see them wait until January 1st instead of giving by the end of the year. We may see them wait until January 2026 to take advantage of that universal charitable deduction. So say a donor typically gives $1,000 per year, they might give either $1,000 January 1st, or might spread it out $500 at the beginning of the year and then maybe make another gift at the end of the year. So those things are some considerations. So if we see a decline in charitable giving, in the month of December, but an uptick right away at the beginning of the year, which is normally a lull in charitable giving, we might be able to extract that might be the reason for that. And then for those itemizers, again, as I mentioned, the changes to the tax bracket changes, we might see some additional front loading of larger gifts by the end of 2025. One thing in my wheelhouse that I just wanted to make mention for everyone is the Community Foundation of Johnson County, along with other accredited community foundations in Iowa, manages the Endow Iowa Tax Credit Program. And so there have been some changes to this program that actually will go into effect January 1st as well. But currently, through the end of the year, the existing rules for donors making eligible gifts to receive the Endow Iowa tax credit are in play. So what does this mean? Well, it's basically giving through the end of the year gives access to basically double the amount of credit that will be available just on January 1st. So the change is that the maximum tax credit that is available for any one donor currently is $100,000. So for example, if a donor makes a gift to an endowment fund held at a community foundation, so Community Foundation of Johnson County, up to $400,000 of the gift would be eligible for the credit. So the maximum credit then would be $100,000. So 25% of $400,000 is $100,000. So moving forward, the maximum credit available to any one taxpayer will be reduced to $50,000. And that is the change that will be going into effect. There's also a couple other changes about corporate advice funds that are endowed are not allowed, but we haven't seen a lot of that impacting our work anyway. So what I would leave you with is if you have donors who are interested in maybe making a gift to your organizational endowment already held at the Community Foundation, or if you don't have one already and are exploring that, we can easily uplift that type of fund to make sure that we maximize the giving opportunity for your donors. Okay, so that was kind of the unexpected housekeeping that I sort of wanted to give everyone. But just a little bit about how the Community Foundation operates. So we work with donors, and in your case, you are all nonprofit organizations. So your donors are also our donors. And we really value and respect that relationship that you have with your donors, especially if they're giving to a fund that you hold, an agency endowment fund or charitable giving fund. So we work with donors to make gifts to existing funds or start a new fund for them as well. Those funds, we charge an administrative fee on, and that's what supports the operations of the Community Foundation. And because we are a 501c3 nonprofit organization just like you, we are obligated and committed to giving back to the community that we serve. And so we are always trying to find opportunities to reinvest in the community, whether that is grants for quality of life initiatives happening in the community, or whether it's providing free educational programming or support to nonprofits in other ways. We kind of fully come full circle. But those work with funds are so important, and that's where all of you come in, because we're so grateful to have many of your organizational endowment or charitable giving funds. I wanted to make clear regarding funds that we offer two types of organizational funds. One is an endowed fund, and one is a non-endowed, which we call the charitable giving fund. So the difference is the endowed fund is considered a permanently held fund. That fund is invested to grow over time. It is designed to be sort of a permanent resource for a 5% spending grant to come back to your organization for whatever the description of the fund agreement is. So for many organizations that have an agency fund, it's just general support to the organization. And so as your endowed fund grows, that is steady, reliable sources of operational assistance to your organization. Those endowed funds are also excellent vehicles to receive plan gifts and estate gifts from donors who are wanting to give to the organization, but they want their gift to last, and the donor gets to be recognized long into the future for their contribution to their organization. So that's endowed fund. Those types of funds are also the funds that are eligible for the Endow Iowa tax credit, those endowed funds. The other type of fund are charitable giving funds, and these are funds established by the organization to serve really as a charitable sort of checking account for your organization housed here at the Community Foundation. And these types of funds are excellent vehicles for what I kind of consider maybe some more like pass-through type transactions for your organization. You can get access to these funds in your charitable giving fund at any time that you need it. You'll just put in a request and we'll just verify that your request meets the agreement, the fund agreement that we've established for the purpose. But it's an excellent way for you to tap into some of the more advanced giving donor services that we can offer to your organization because you have that type of fund. And so now that we have that kind of set up, I want to go into the more complicated gifting scenarios. And remember, I can't see anybody, so I'm hoping that we're all good here. But I just wanted to go through a few of the types of transactions that we can, with those types of funds that we can handle for you through the Community Foundation, and then provide a little bit of learning as well on those more complicated gifting type transactions. So one of the most wonderful ways to support an organization and kind of elevate your giving portfolio for your donors is accepting gifts of appreciated security. So these are stock gifts. And by having a fund at the Community Foundation, we can actually work with your donor and their broker to have the gift of appreciated securities transferred to us into our brokerage account. Okay. We then sell that gift of appreciated security and it becomes cash for your fund that you can then choose to put into the endowment fund, or you can choose to put it into the charitable giving fund. Again, if the funds go into the endowment fund, they get that extra giving incentive. But the important thing to know for the donors is many donors, especially right now, if you've been following the stock market, although this week has been a little bit softer, but I don't pay attention to short-term noise, so to speak. I look for trends. But in general, the performance of the stock market has been quite strong. We have a number of donors and their investment portfolios, brokerage accounts that have appreciated securities. So if a donor has owned the stock for 1 year or more, and they want to gift it directly to the charity, they can get a tax deduction for the full value, the current value of the stock today, not what they paid, but what the stock is valued at now, and use that as a charitable deduction. They also bypass all the capital gains that they might have otherwise received if they would have sold the stock themselves, put it into their checking account, and then made the gift directly to charity. It's a great way. It's a great way for donors to make larger gifts to an organization. Our services are that we we'll accept the gift of securities. We provide the administrative oversight of when it's passing through the brokerage account. We also issue the donor their tax-deductible gift receipt and an additional IRS required form. I think it's 82. correct me if I'm wrong. Anyway, there's an additional form that accompanies gifts of non-cash gifts when they're donated to charity for the IRS, and we kind of take care of all of that. And we'll let the organization know when the funds are available in your account. Another great giving tool for our donors who are of a little older age is utilizing their IRAs, their retirement accounts for charitable giving. And so there's two terms that I want everyone to be mindful of: qualified charitable distributions and required minimum distributions. So similar in concept, but different sort of requirements. So required minimum distributions are for anyone who has an IRA. They reach the age of 73 and older, and they are required to start taking distributions from their account. Now, as you recall in our calculation for adjusted gross income, transfers into into their income, as long as it's not a Roth IRA, are taxable to them. And so giving those required minimum distributions directly to a charity bypasses that income for them, and they get to recognize the amount of the gift for tax purposes, which is really great. The other piece is the qualified charitable distributions. So donors who are 70 and a half and older can make distributions from their IRAs to a charity to support the causes that they want. Again, it counts towards, if they're of a certain age, it'll count towards the required minimum distribution. And just a great way to give charitably. The maximum for this year that any one donor can give as a qualified charitable distribution is $108,000. So that's a quite generous amount. The beauty of giving that we work with donors, so we often get donors who contact us about utilizing the Community Foundation as their intermediary for gifting in this way, because we are the one organization receiving the gift. So it's very simple for the donors. The donor makes their qualified charitable distribution to the Community Foundation, and then we can break it up for them on behalf of many organizations. So maybe they want to support 2 different endowment funds and they want a gift to go outright. We break it up however they want. So a good tool there. And also, again, if you have a donor who's wanting to make a gift to the endowed fund, we can process those pieces through our office there too. This bottom kind of graphic just basically shows if you're ever working with a donor and they're like, oh, I want to use my retirement assets, just make sure that they make the gift directly to the charity, either you directly or to the Community Foundation, and they don't take the distribution in as income, because there's some tax savings there depending on what tax bracket they are in. And this is the calculation basically showing if this was a donor who was in a 22% tax bracket there, what their tax savings would be. So $980 is saved if it goes directly to the charity versus them taking it in as income. And these slides will be available to everyone, so you can take a deep dive and look at those numbers. Gifts of real estate. Now, I'm sure that probably seems very cumbersome to many organizations doing a gift of real estate, but we at the Community Foundation can actually make the process pretty seamless for you, in that the Community Foundation can serve as the organization receiving the gift. We hold that gift in a separate LLC while the piece of real estate is receiving a time period when we are anticipating a sale. The other things that we can help work through are requiring a third-party independent appraisal. We'll work with the donor to ensure that they have an independent third-party appraisal at the time of gifting. Also, we can work through the details. When you receive a gift of real estate, obviously there is some inherent risk that goes along with that. So we can help with the determining the environmental assessment, also any other needs that might be need to be explored regarding the property, and also assistance with the title opinion and kind of all of those pieces. The point here I would like to make is, we can provide guidance to you. But the ultimate goal is that the piece of property is not held in perpetuity. So our goal is to take it in, hold it, process all the pieces, sell the property, and then those proceeds go into a fund that we manage for you here at the Community Foundation. So if you have a gift of real estate that you're exploring with a donor, let us help you. We would be happy to help you and your board work through some of those details about getting a gift of real estate. Also legacy gifts. So legacy gifts are planned gifts. Often they come in partnership with a donor that you've worked with for some time. Maybe it's a donor who's been giving to your organization over time, but now they are wanting to, leave a legacy. And there's some great options for legacy giving that donors can explore. Bequests are basically just a statement in a donor's will that they want to give an outright gift to your organization in their will. Also, beneficiary designations. So just like we would name our partner, our spouse, our children as a beneficiary of retirement assets, you can also have your organization named as a beneficiary of retirement assets as well. There are also tools, charitable trusts and charitable annuities, which I'm going to skim over for everyone in a couple other slides, that are a little bit more complex, but good options for donors who have more significant wealth and want to preserve assets for family, considering their family, but then also are charitably inclined too, which are, to me, they're just fascinating tools to use, and we'll dive into those a little bit. And then also gifts of real estate, stock, and property can also be planned giving assets as well. The best gifts for nonprofits to receive are the gifts that if a donor would be giving them to their heir, they would be having significant tax consequences. Number one thing I think about are retirement assets, so traditional IRAs, 401ks. If an heir inherits a traditional IRA, they must pay ordinary income tax on the withdrawal, and that's generally over a 10-year period. So keeping in mind that ordinary income is dependent on the individual's tax bracket. So when we think about donors who have significant wealth, the likelihood of their loved one, their heirs, also being in a higher tax bracket is pretty likely. And so giving a gift of IRA to an heir creates significant tax consequences. So versus having those assets come to the charity, make a really good tool. And then there are other planning strategies that the donor can use for other assets to the heir. You might learn or hear about something called step up in basis. So these are assets where, say a donor bought a property, a home for $100,000. It's now worth $1 million. If that home transfers to an heir, the heir gets the step up in basis, meaning they get to inherit it at that amount, and then they would be responsible for any additional gain above that amount of the gift. So what I want to leave you with is often, donors planning more complex gifting scenarios. There are other assets that that are best suited for the nonprofit versus those given to heirs. So retirement assets are excellent for a nonprofit. Also appreciated securities, as I've kind of mentioned, same thing applies. So when the community foundation or nonprofit sells a gift of appreciated security, they're bypassing those capital gains and receiving the assets tax-free. Life insurance policies are also another great way for a nonprofit to receive a bequest gift. So there's a couple scenarios. Either the donor has an existing policy where they are giving the nonprofit is named as the beneficiary of the life insurance, or the nonprofit actually can purchase life insurance on behalf of the donor, utilizing a gift that the donor has made. So again, lots of scenarios, a little bit complicated, but life insurance can be a great tool. And then assets in trust, which we're going to talk about in just a moment. But we have really leaned into the work of legacy planning here in the community, and we know how powerful generational wealth and giving can be. We are in the midst of the greatest transfer of wealth from one generation to another happening all across the country as the baby boomer generation is transferring assets to their loved ones. We know that there's a great opportunity to have that first generation or second or third generation support causes that they care about through legacy planning. So we're working on those pieces. And really happy that earlier this year, we actually announced our Heart of Johnson County Legacy Society, which all of your donors are eligible for as well. If they establish a legacy fund, a legacy agreement here at the Community Foundation that would benefit your organization, they could be a member of the Legacy Society. We are honoring donors through their commitment to supporting your organization, and we're just really happy to have Dave and Lisa Bluter serving as our honorary co-chairs for our Legacy Society. So anyone who gets added to the Legacy Society will have some special opportunities to interact with our co-chairs as we launch the program. Hope everybody's doing okay. So we're going to go through a couple more complex gifting scenarios, just like skimming the surface, just because I want you to understand what they are and how they work. And then we'll take time for some questions. So I'm hoping everybody's still hanging in there with me because I can't see you, but all right.
All good so far.
Okay, good. Thank you, Ellie. Proof of life behind the monitor. So that's great. So the first giving tool I want to make you aware of is a gifting tool called a charitable gift annuity. So this is a contract between the donor and the charity, so us as the community foundation, where we agree for a fixed period of time to pay the donor a quarterly or annual annuity payment for a period of time. We are investing and hopefully growing that fund. So when the period of time expires, there is a charitable remainder for the nonprofit organization. These types of tools were very popular when interest rates were very low, and I can tell you why. When the annuity payment goes to the donor, so first off, there's an actuarial calculation that provides the donor kind of upfront with a charitable deduction, basically, like an actuarial calculation over a specific period of time. But the challenge is that when interest rates are low, the payout amount is set by a specific it's like the Charitable Gift Annuity Association. So that monthly payout rate or the quarterly payout rate is determined and set by the overseers of gift annuity processing. So right now, interest rates are high, and so the payout to the donors are high, which is great, but not great for two reasons. One is the income going to the donor is taxable, so the payment is higher, and the amount left behind, because we're paying out more, is reduced. So there's a reduced amount of tax deductibility, and it's coming in as income. So we're not seeing a great amount of energy with these funds so far. But I will say that there is a provision that actually allows donors to use up to $50,000 when they are 70 and a half and older, use $50,000 of retirement assets to create one of these charitable gift annuities. But even with that incentive, we're not seeing a lot of movement happening just because of interest rates where they are right now. But as interest rates drop and things change, we might see some change in that. So that's how a charitable gift annuity works. Charitable lead trust. These are really interesting. So this is an irrevocable trust tool that makes lead gifts. So I always think leading gifts to the charity, not remainder gifts, a leading gifts over time to the charity. So it is a trust structure that has a specific period of time and payout going to a charity. If you can look at the diagram, so we've got a nice couple who are transferring assets into a charitable lead trust. Okay, that charitable lead trust, that trust entity, is acting as an investment trust. So the gifts coming in, but it's also being invested and growing over time. So there are payments coming out of the trust to the charity, as defined by the terms of the trust agreement. But when the term ends, the remaining assets, and hopefully that's grown because of investment, are going to the remainder family members. So from a planning standpoint, from a philanthropic planning standpoint, this could be a great way for a donor who wants to give charitably, but is also mindful of wanting to leave assets for family members as well. The next tool is the charitable remainder trust. So just as it sounds, there is a trust agreement that's established. So assets are transferred into the trust. The trust is actually paying a beneficiary for a specific period of time, an income stream. That trust also is investing those assets to grow over time. And then once either the trust term expires or the beneficiary expires, what is remaining, the remainder balance, is transferred to the charity for their use. Something that's interesting about these trusts is they can be invested in lots of different types of income producing activities, but the trust specifically keeps track because it is a taxable event to the beneficiary. So when those payments come into the beneficiary, it's coming in as some type of an income, but it is broken out to delineate the difference between what would be ordinary income. So keeping in mind, like, a donor's tax bracket, if they're in a higher tax bracket, they're paying, or in its ordinary income, versus maybe there are some appreciated securities in that trust that are just providing capital gains, which is at 15% versus a 35% tax bracket, for example. So there's an interesting tax calculation that goes on when a beneficiary knows when that income comes. And I think Julie Yoder knows a thing or two about the complications of processing that type of tax document. But these are also great planning tools, and this is something that the Community Foundation can help facilitate for your organization, but we would be doing so in conjunction with the donor and their planning professionals, ultimately with your organization being the beneficiary of the assets coming through. The final piece I wanted to share is also just an interesting concept about retained life estates. So this is a donor who comes to your organization and says, I want to leave a gift to your organization. The only asset I have, I don't have any heirs, maybe I have a home that I want to give. The donor actually has an ability to make an official legal agreement, an irrevocable agreement, to leave the house to your organization during their living years. And because the agreement is irrevocable in place, there is actually an actuarial calculation that would give the donor some tax benefit for giving it, making the commitment to give during their living years, and then the asset would transfer to the organization upon the donor's passing. The donor's still responsible for, maintenance and upkeep of the house, but just a really interesting way. Sometimes we think about, donors, we think about giving in cash only, but there are many other opportunities for giving that can give a donor some tax advantages during their living years, if needed, and then making gifts, legacy gifts, upon their passing as well. So that is going to be my last slide. And so because I can't see everyone, I'm going to stop share. Oh, there is everyone. Hi. And I just kind of want to open it up to questions. No questions because everyone is like, what? What?
I have a question.
Yeah.
So just thinking about like how this could affect my organization, we're trying to, I feel like over the last several years, we've said, what's our legacy planning plan, or have we communicated to donors what their options are? And we kind of randomly say, like, if you'd like to discuss, please contact us. We've never actually reached out to anybody or done that.
Yeah.
What I think I'm hearing is that if our organization, if Riverside were to set up a charitable giving fund, say at CFJC,
Yeah.
when those questions came up, we could potentially point them to you versus having to deal with it ourselves and come up with all this stuff. Is that
Yeah, exactly.
kind of what I'm hearing? Yeah.
Yep. We are going, we're an extension of your plan giving team. Because ultimately, all of the funds that we hold, all of them are designated for a specific purpose, or organization. And so we would be doing the same thing, for you. Exactly.
Hi, everybody. I'm on my phone. Can you hear me now?
Hi, welcome.
Hello. I was just wondering about the universal addiction possibility of the $1,000 to $2,000
Yeah.
for people that take the standard deduction.
Yep.
I'm always a bit confused with the tax years. So that goes into effect for people
January.
that are giving in
Yep.
2026, correct? Okay,
Exactly. So starting January 1st.
lovely. Okay,
Yep.
fantastic. Thank you.
You're welcome.
That's a great question, Kate. I'm also
Yeah, it will be, won't it be an interesting experiment to see if January giving picks up because someone just wanted to like wait one day, and while they have to wait the whole, a whole year plus to actually, matriculate that into their taxes. It'll just be interesting to see if enough people know about it. I'm really excited about it. I know we in the nonprofit, community foundation space have been advocating for a universal charitable deduction. We saw it during COVID. I think there was a $200 allowance for anyone to give to a nonprofit during COVID, and it was extremely successful. Lots of donors took advantage of that. Lots of taxpayers took advantage of that. So I'm really happy to see that continue. There's lots of things I'm not happy about, but at least there's one shining piece in that. Hey, Jessica.
Hi, I had a question. As you had mentioned, you're like, it's not that common that, homes are given. And actually in, the housing world, it is actually quite common that older folks that don't have heirs or a plan actually are wanting to donate a property for not just asset, and getting the liquid out of it, but as that home itself, either to put it as a home ownership opportunity or as a rental
Yep.
opportunity for low-income families or qualified
Yep.
families. Is there a role that the community foundation could play on those sort of charitable givings, either if it's just helping with that transfer, the tax benefits to those that are donating, to those that may or may not have funds with you all? Do you see if you guys could have a role in that process?
Yeah, our organization, not just because our position is to liquidate the liquidate the asset. There is inherent a lot of liability, involved in that. But, that would mean that ownership would not, fall under the community foundation's
Yeah.
space. But I would be open to seek guidance from you and Housing Fellowship on how you guys are navigating that, because I would love to learn more too.
Yeah.
Yeah, I think our philosophy is, we want to mitigate risk, obviously. But the charitable intent behind, what is happening is worthwhile.
Absolutely.
Yeah.
The last one that I'd heard of was last year. There was a home on the north side, and it was given to Inside Out Reentry Community, which is a lovely partner agency. And they were looking for suggestions and help. And I personally don't have this expertise, but you all obviously are extremely well, informed about it. So even if you're not the direct holder of it, maybe at least advising if that would happen to come along again.
Yeah, absolutely. Yep, absolutely. We can just, help identify the, checklist of things for everybody to consider. And that's for, for their board too.
Yep.
Because we are all not, coming up with those decisions in a vacuum. So yeah.
Exactly.
Great.
It takes a team.
Exactly.
Well, and Jess, you already know, we also reach out to Ellen McCabe a lot. She's got
Ellen McCabe at the
wealth
Housing
of
Trust
knowledge.
Fund is great. Yes, absolutely.
Yeah, I'm amazed at how many properties are managed by the Housing Fellowship. What an amazing organization. Yeah.
Absolutely.
Great.
I think you mentioned this earlier in the session, but can you maybe outline the fees that not-for-profits might have if we have an endowed fund or charitable giving fund with CFJC?
Yeah, it's 1.25%. So if you have a distribution from the fund of $100, that's $1.25. So keeping in mind, we are a nonprofit also. So our position is to keep fees as, reasonable and low as we can, being a nonprofit. And, yeah, our work is to try to make philanthropic transactions happen, as many as we can for as many organizations as we can.
Thanks. That seems like a very reasonable fee.
Well, considering what the price of a stamp is,
Mhm.
and we're, doing the acknowledgement, and that includes the bookkeeping, and then also all of the funds that are held at the Community Foundation are also wrapped up in our audit. So there isn't any additional auditing requirements that your organization would be needing to do for any of those complex gifting transactions. Great.
Thanks, Adam.
Well, we almost went all the way to time, Ellie.
We did. Yeah,
was
that's
a
great.
lot of material.
Any last questions for Shelly? Otherwise, I've got just a couple announcements. Okay, wonderful. Well, thank you, Shelly. We will send out slides in the kind of same spot on our website we always do under nonprofit resources. So they'll be there. Recording will be there as well. But keep an eye out on our newsletter. We'll have some information about the spring capacity building grants before year end. So those will be in the spring, not quite yet, but we'll start getting some information out about those here shortly. So look for that. And then on January 22nd, we're going to host our next community conversation by Zoom because of weather in Iowa. We're not going to play with that. So on January 22nd, we'll be doing a community conversation on senior support. So take a peek at that. We'll send lots of info out here. Good luck with your year-end giving campaigns and what all you have going on, and happy holiday season to everyone.